The main difference between SCHD and SPHD lies in their investment focus. SPHD focuses on high dividend, low volatility stocks, utilizing a rules-based methodology that tracks the performance of 50 stocks from the S&P 500 that offer the highest dividends with the lowest volatility, making it ideal for risk-averse investors. In contrast, SCHD tracks the Dow Jones U.S. Dividend 100 Index, considering dividend growth, yield, and payout ratio, making it suitable for risk-tolerant investors. Although SPHD's low volatility makes it perfect for beginners, its portfolio is limited to real estate, consumer staples, and utilities, as these have the lowest risk and highest potential returns. On the other hand, SCHD's focus on the Dow Jones 100 Index provides a more diverse portfolio, offering more choices beyond traditional consumer staples, real estate, and utilities. In terms of performance, SCHD has consistently outperformed SPHD in the last decade. For instance, by December 31, 2023, SCHD had gained total returns of 9.5% in 3 years, 14% in 5 years, and 11% in 10 years, whereas SPHD had gained 8.7%, 7%, and 8.7% over the same periods. Additionally, SCHD's fees are lower than SPHD's, with a 0.06% expense ratio compared to SPHD's 0.3%, which becomes more apparent over time and affects total returns. Despite their differences, both investments offer reasonable exposure to the U.S. stock market, making them ideal for new and seasoned investors. And they are dividend-oriented, perfect for income-oriented investors. Ultimately, SCHD offers superior performance and lower fees, making it the overall winner in this comparison.